Good morning. I'm Alastair Beddow, Managing Director of Meridian West. Great to have so many people join us this morning. I think people are aware that we've kicked off. This is the second of our virtual breakfasts. People who missed the first one can catch that on YouTube. So that was last week, looking at some of the trends impacting professional services. Today, we're going to do a deeper dive into other sectors of the economy and what the impact on demand will look like there. We have these virtual breakfasts every Tuesday morning. So if you're interested and want to share any details of those with colleagues, please do invite them. All the details are on our website. And a slight addition to the format today, we'll be running up to 9:30, at which point we will open it out for questions. So if anybody does want to stay on the line for a little while longer and ask our panel any questions, there'll be an opportunity to do that shortly after 9:30. So I mentioned the panel. I'm pleased this morning to be joined by a range of experts from different parts of the economy. We have Milan Dalal from Brook Intelligence, who's going to kick us off just with an overview of what's happening across different industries. We also have Andrew Tate. He's a restructuring partner at Kreston Reeves, talking about some of his experiences with clients at the moment. And then two Simons, Simon Hack, who's Managing Director of What's Aviation, and Simon Blaxill, who's Managing Director of Blaxill, talking about how things have been for them in their businesses over the last couple of weeks and what the future may hold. So I'm going to kick us off with Milan Dalal, Brook Intelligence. Those of you who don't know Brook, they provide in-depth sector and company profiling. Milan, I want to kind of kick us off with some of your research into how different sectors of the economy are faring at this time.
Okay, so good morning, everyone. Thank you for joining us this morning. I was asked to look at how COVID-19 is affecting different sectors. And just to give you a sort of broad overview first, just to set the context, looking a little while back between the 2nd of January and 23rd of March, this was the impact of listed companies, not private companies, but listed company share prices. And it's a good gauge as to how COVID-19 is affecting different sectors. Now, I think enough time has passed where we can all have a sense of which sectors are being impacted. And at the bottom, as you would expect, there are the auto manufacturers, the retailers excluding food and retail that have been particularly badly hit, construction companies, material companies, suppliers, etc. What was interesting at the time, and I didn't quite get it, was the fossil fuel producers and distributors. Now, I think the context was set yesterday. So for those who've been following the news, the cost of a barrel of oil has dropped to minus $40 a barrel, which is the first time it's ever gone into negative territory ever in history. That means producers are now actually offering money to suppliers to take the oil off their hands that they can't store anywhere. And that's never happened before, and it's quite shocking. At the top end of the scale, as you might expect, as we've all experienced ourselves, the food and drug retailers doing exceptionally well, personal goods retailers, manufacturers, and pharmaceutical companies, and so the line goes on. That's evidenced here when we look at the individual share prices of those same companies. So as soon as the lockdown kicked in Italy, those same companies here, food and drug retailers, pharmaceutical companies, individual share prices shot up. At the other end of the scale, and particularly badly hit, are the travel and tourism companies, but again, the fuel companies and the auto manufacturers. And it's quite stark difference in terms of polarization there, and who's benefiting from this in a sort of quite bad way, really, and who's being particularly badly impacted. One of the other things that we were then looking at is which practice areas might create opportunities and where you might see increased activities within your firms. Now, employment's the most obvious one because there is a lot of furloughing going on and redundancies and restructuring of work. So I didn't focus on that too much. One of the areas that sort of stood out most significantly when I was looking at this is restructuring and finance. Until the markets open up, until clients know, or companies know how demand will pick up, where their money will be coming in, the big crisis at the minute is cash. Cash is king, and that's been said numerous times. So there's a lot of financing going on. That's either seeking new financing or in a lot of cases renegotiating credit lines just to make sure that companies have that access to finance from banks should they need it. And here is just some examples. If you look, the values that are being raised are quite sort of eye-watering, really. Now, the obvious examples are the ones that I mentioned in the previous slide, the auto manufacturers, the leisure companies, oil and gas companies. But I was actually quite surprised, and I was coming across more and more examples in different sectors. So even TMT has been hit. The context being, in the case of Fox Corporation, their advertising revenue has just fallen off a cliff, basically, and they're having to shore up their finances. In the case of Disney, their theme parks are all shut, so obviously they're facing massive cash flow issues at the moment. One of the challenges is the credit rating agencies are downgrading the ratings of a lot of companies. Understandably, that's what they have to do. But what that means for companies is that when they are looking to raise finance, their cost of borrowing has become very, very expensive, if they can get it at all. And I think what will happen is in the next sort of 2 years down the line, those practices, by being accountancy firms, law firms, etc., will continue to be quite busy as firms look to refinance that debt. Just carrying on that theme in banking and financing, and this is where I think Andrew Tate, who works in restructuring, will have a lot more to add than I do. Just in the last couple of weeks, there have been an awful lot of companies going into administration. Here are just some examples. Now, these are typically high street names, a lot of them are retailers. I think the difference here in the examples I've given is that these are companies that probably had underlying issues before the pandemic started, and now we're seeing them facing financial difficulty. But there will be many, many companies in other sectors, oil and gas that I mentioned, manufacturing, who are also facing difficulty, whose underlying business is quite strong. And I think that's where, as advisors, we have a role to play to try and making sure these companies receive the support that they need. One quite shocking statistic from the Centre for Asia Pacific Aviation is that they reckon unless there's significant government intervention, roughly half the world's 800 airlines could be bankrupt by the end of May. And that I don't think is unreasonable to expect. UBS pointed out quite an interesting statistic, and again, quite a sad one, is that roughly 13% of the 8 trillion corporate credit market is at risk of defaulting or seeing bankruptcy protection. So I think this will rumble on for the next year or so. Moving on very quickly, in terms of M&A, M&A has been down by a third in the first quarter of the year in terms of value and by volume as well. However, private equity is sitting on a vast amount of money. It's estimated they're sitting on between $2 and $2.5 trillion of dry powder. That's money they've raised but are yet to invest. And invariably, as valuations of companies fall, they'll be looking to pick up bargains there as well. In terms of sectors, I think they'll be looking for sectors that are, where you can quantify the risk of COVID-19. So it'll be areas like technology, business services, and software as well. But they're also providing debt finance, don't forget, many private equity firms. And in fact, one unnamed source said since this crisis began, their phones have not stopped ringing. That's companies looking to sell distressed businesses or indeed to raise money. So that's a good opportunity. Just finishing off, because I realize my time is up. I think what you should be doing, perhaps as a suggestion, is looking at your own business and saying, in terms of clients generate 80% of our revenues, maybe trying to sort of put them into 2 broad buckets. Those that are going to do well, and I gave some examples earlier, and those that are at risk. This is companies that are at risk in terms of your billings in your firm, but also firms that need help and support from you. And I think the 2 Simons will have a little bit more to say on that as well. All I'd say as a tip is think laterally, look at individual companies, and some tips are look at your client's cash position. Do they have a lot of debt? Again, think laterally. Will the falling value of the pound affect their business, their cash position? Are they operating in a business where they have a huge supply chain, where they are contractors to clients, and might there be litigation issues where they can't fulfill those obligations? A big area that I didn't touch upon in terms of practice areas is going to be litigation. There's already evidence to say nurses and doctors are thinking of suing hospitals for not providing a safe working environment. Equally, customers from airlines and cruise ships are thinking of taking out suits against those companies for not providing a safe environment. So I didn't touch on litigation, but I think there'll be an awful lot coming through there as well. So that's the end of my quick presentation. I hope that was helpful. And I'm just going to hand back over to Alastair.
Great, thank you, Milan. And it's very interesting to see that your findings there very much echo what the results of our poll suggest. So at the end of our webinar last week, we invited attendees to take part in a quick poll, share their thoughts on which sectors they thought would be most impacted. And the results of that paint a very similar picture. Retail, top of the list, 2/3 of those who took part said that would be one of the most hard hit. That's followed very closely by transport, by construction and real estate, and then we've got manufacturing and oil and gas not too far behind. So some very similar themes emerging there. So what I want to do now is bring Andrew into our conversation. Andrew Tate is a restructuring partner at Kreston Reeves. And I guess, Andrew, maybe to start, I'm interested, the picture that Milan paints there of the different parts of the economy, does that reflect the vulnerabilities that you're seeing, the kinds of clients that have been in touch with you and your colleagues over the last couple of weeks?
Thank you, and it's great to be part of this, so thank you very much. Yes, so Kreston Reeves is an accountancy practice, and we service a number of sectors. I think to echo one of the points which Milan made, which is that the businesses that have been in touch with us with difficulty so far are the ones with underlying issues, and I'll come back to that in a moment. I think in terms of sectors, I think a lot of businesses, yes, certainly travel, retail, those businesses are very hard hit, and are having to look to mothball their businesses, and they've had to react very quickly to mothballing, to discussions with landlords, to speaking to banks, etc. So certainly we've been having many conversations. I think one of the interesting things coming out of our practice is actually that the application for CBILS, the government business interruption scheme, actually seems to be not as heavily taken up as perhaps we might have expected it to be. And I think that it's around the CBILS application that there is an awful lot of confusion. So furloughing staff is easy to understand, and it's a grant. It's a direct grant into a business. I think that many businesses have had conversations with their bankers about taking out further funding. Milan said that cash is king, and lots of businesses are looking as to how they can stretch their funding through to the other side of this. And the conversations with banks, obviously there's been a lot of these government measures have been very fast moving. They've changed as we've gone along, and CBILS is certainly one of those areas. We were told at the beginning that actually businesses had to effectively be rejected by their bank for further lending, and only then could they access CBILS. And I think that and that has now changed so that CBILS should be available, but banks still seem to be wanting to service their clients via lending to the business by extending overdrafts and loans rather than going straight into CBILS. So I think that is causing a lot of uncertainty in many sectors, in addition to the fact that actually businesses are having to look at what their cash flow funding is likely to be over the next few months, and they simply don't know how that's going to appear. I think on the distress side, so I'm a restructuring expert, and have looked to restructuring business and rescue businesses, and certainly there is very much a positive move at the moment for businesses to be saved, to be mothballed, and the administrations that Milan was talking about are largely protective administrations. And what that means is that the company goes into administration, and because it's got the protection of the court, landlords, other suppliers can't actually take the initiative away from the directors of the company and actually then pull the business down. So those protective administrations are the way that things are going at the moment, and actually there is some new insolvency law coming in which will actually further help us with that. There's a moratorium, a breathing space for businesses, which is due to come into legislation very quickly. It's not in yet, it's been talked about, but actually Parliament comes back, I think it's today, from their Easter recess, and this is going to be one of the measures that they will be looking to implement, I think, over the course of the next month. But this moratorium, this breathing space, is going to be very valuable for businesses if they get to the stage where they actually need to have that breathing space. So I think that what we are going to see is that at the moment, businesses are very much relying on furloughing. And obviously that's great that that's been extended to the end of June. But actually beyond that, businesses are having to look at their cash flow, and I think some hard decisions are going to have to be taken where redundancies are probably going to follow on from there, simply because the release from lockdown we believe is going to be slow. I even saw reference to a potentially a further lockdown taking place in September. So I think that businesses all need to be prepared for that, and I think that is going to cause some really hard decisions to be taken. And I think some business models in the lower end of the scale of the sectors that Milan was talking about, unfortunately, some of those business models are just not going to come back.
Mm-hmm. Interesting. And Milan, some of the examples that Milan talked about, those retailers, some of those high street names who perhaps have been in trouble for some months and years before the pandemic, maybe those underlying challenges. Do you think that those who are going to be most hard hit are those who were struggling before, or actually could the pandemic hit quite hard some industry sectors that actually were doing quite well over the last couple of years and had recovered, over the last decade since the financial crisis?
I think that the businesses that we're seeing getting into difficulties at the moment and having to have those distressed discussions are generally the ones that had underlying issues beforehand. Businesses that are in a good space may have more cash to be able to see them through. They may have a more agile business model that can actually adapt to the current environment. But I think that we are looking at a global recession on its way, and I think that with the confidence of consumer spending, the confidence of businesses across the world, there is inevitably going to be a step down. And unfortunately, many businesses, even the ones that you say that have been very healthy, they're going to, some of them are going to find it very difficult to recover. Some of them will have to make redundancies and dismantle their workforce to a certain extent, and then have to start again when things get better. So there's no doubt that we will come through this eventually, but I think it's going to be a long time before we get back to normality.
Okay, interesting. Stay with us, Andrew. I want to bring in Simon and Simon now. So we have Simon Blaxill, who I mentioned is Managing Director of Kent Blaxill, Simon Hack with What's Aviation, two sectors there which are amongst our kind of top list of those perhaps most hard hit. If I can maybe turn to Simon Blaxill first. You're kind of Managing Director of kind of business in the kind of builders trades, 18 sites across England. Maybe just give us a flavour of what the last month has been like for you. What are the kind of major issues that you've been grappling with, and how do you see things changing over the coming weeks and months?
Well, good question, really. In short, we have closed our business having listened to the Prime Minister on the 23rd, thought it was the right thing to do, as a result of which we've got fixed overheads. So we are, if you like, experiencing some fairly scary losses. Our approach in the short term, as has been commented by other speakers, is to cut costs where we can to minimise the short-term loss. So that's anything from furloughing staff to approaching landlords, insurance companies, any contracts that we might be able to defer. I'll throw in here, some customers have paid their accounts. Others have said to us, I'm sorry, we won't be paying you till June. And that I should have said, we're essentially supplying the trade, that's builders, although we have a healthy share of consumer business and we specialise in paint. So conservation of cash is absolutely the immediate priority. Difficulty for us sort of in terms of saying where we go from here is actually understanding what comes next. And you probably have heard lots in the press about the construction industry. Should we be open? Shouldn't we be open? A big thing for me has been talking to other businesses. We're part of a buying group, and there's one business that's traded all the way through supplying hospitals and the like. So as of yesterday, we did actually open up again a number of our sites with skeleton crews, and actually, I kind of feel that's what a lot of businesses are going to have to do, where there is no clear steer from the government, and that there needs to be one. There needs to be a grown-up conversation as to how we're going to get out of this, because we are fortunate in that we sold a subsidiary, so we have cash, but even that won't last forever. So while I like to think we're in a relatively strong position, there's no doubt there will be businesses in quite a large number that go under. There's no doubt there will be, in my view, quite large-scale redundancies, which is a great shame. So even though I like, as I say, to think we'll come out the other side, we will be bruised, and it is a question then of what opportunities there are and what we can do to take advantage of them. But if I'm honest, it's very difficult to be more specific in terms of what those opportunities would be, other than stating the obvious that online businesses will potentially take an increased market share. Yeah. Which I'll sign off on this is a great shame, because actually we believe in personal service and adding value, and I'm afraid online takes away a lot of the personal element of trading, and people don't always realise the benefit of having a product that lasts 5 years as opposed to 2 years. But we will have to grapple with those sorts of challenges.
Mm-hmm. And one question, just picking up on what you were saying there, cost management clearly is going to become, even more important over the coming months. Is that likely to include, spend on external advice, or is this a period where actually, having that external hand to hold and guide you through the process is going to become more important for you?
A difficult one, because you'll gather from what I said, we are cutting costs wherever we can. I mean, we have certainly we are talking to all our professional advisors, and I would say we have a good relationship with our professional advisors, and it's all about understanding what each other needs and how you can help. We've certainly used our solicitors in understanding the furloughing and that side of things. On the other hand, in approaching landlords, we thought it better to do it ourselves, because if you're approaching a landlord to say, look, please, we're in trouble, we want to be good tenants, and we have paid them all for Q2, so they're receptive to that. But we felt they'd be more receptive if it was me or a colleague speaking to them, and in the round they have been very good. Rates, we're not eligible for rates because we're not retail, sadly. But I've spoken to our surveyor, and he gave me some good advice, and that was in respect of what they did, and I was able to use that. So communication. I mean, I'd say that to all professional advisors, as best you can, without necessarily selling your wares at the moment. Stay close. We're all under pressure. And therefore anything you can do to really show that you care, if I put it that way, generate the team spirit, we're all in it together. It's amazing how, I say, through discussion, I've come up with some other ideas, and you think sometimes you're on your own. So I think opportunities will arise for the professional fraternity, but right now it's a bit difficult to say anything more than be sensitive and stay as close as you can.
Mm-hmm. Fantastic. Simon Hack, to kind of come to you now. We've been reading in the papers recently, obviously aviation, some big names potentially threatened and asking for big government support, which may or may not be forthcoming. As a supplier to that industry, what's the impact been for you kind of short term, and how do you assess the longer term prospects?
Morning, everyone. Yes, it's been pretty brutal pretty quickly. We've seen revenues fall by more than 90% within about 7 days of the lockdown. We have sites in the US, Australia, and the UK as well, and they've all been similarly impacted. Slightly less in the US because they're just doing more domestic aviation at this point. It's very difficult to see how we get through this in terms of preserving cash. The government has been very helpful, I think, in providing the furlough scheme and in deferment of things like corporation tax as well, which has helped us preserve cash. The difficulty for us is until we have a good steer as to when we think the business will return to some kind of normality, or at least get back onto a track towards that. It really depends on how much cash we can raise to see us through that. So we're spending a tremendous amount of our time doing forecasts, not just for cash, but for revenues going forward to the end of the year.
Mm-hmm. And I guess a similar question to you that I asked Simon Blaxill is what kind of support would you be looking for from advisors at this point, given that obviously you'll be looking at every line item of spend, and with a much greater degree of scrutiny.
Yes, I mean, I think we've received pretty good support actually from banks, from auditors, from solicitors in providing what has been largely free advice, I would say, which is fairly generic advice to all companies, but they have been very supportive. From the auditor's perspective, they've been very kind in not expecting their audit bill to be paid immediately, but at the same time, around the audit there are significant issues. Such as what's going to happen with signing off the accounts and going concern, and just probably a tremendous increase in the amount of work auditors are going to have to do to sign those accounts off. So we really are going to sort of be watching that very closely, because I think that ultimately will impact what our credit rating looks like, and possibly affect our credit terms with suppliers going forwards as well. And in our business, where we work off fairly lengthy credit terms, that could have a big impact on cash after the events of the COVID-19.
Mm-hmm. And I mean, I know a lot of advisors, law firms, accountants, others, have been quite keen at this point in time to communicate out to clients, let them know, it's kind of, we're here to serve you, business as usual, sharing information. I guess there's another side of the argument which says actually clients, just now's not the right time to be having those conversations. We need to kind of leave them to, to get on with things. And if they need help, they'll come to us. But actually, what's your thought on that, Simon? Is it, is the kind of, are you receptive to conversations at this point in time?
Yes, I think we're very receptive to it. I mean, I think everybody needs as much support and discussion on this subject as possible. And any pressure that can be put on the government to try and have some sort of formal exit strategy just gives some kind of credibility to the plans we're putting forwards, because otherwise it's very difficult for us to go to lenders, and we have to, all of our lending is based in the US. Unless we've got a concrete idea on what the business is going to look like in 6, 9, 12 months' time, it's almost impossible to get further lending.
Mm. And Andrew, just to kind of come back to you, I mean, I guess for restructuring and insolvency, you'd be looking ahead and thinking, this is probably going to be a fairly busy time for you and your colleagues. But, do you see a big kind of spike in work, or is this likely to be a kind of, long tail for, the coming months and years even?
So I think generally the insolvency and restructuring profession is expecting that there will be an upturn in formal insolvencies later in the year. The big difference here is actually what liquidity is going to be there to save businesses. So I think there was mention earlier of distressed investors, investors who invest in distressed businesses, and there will definitely be opportunities for them, but there's a huge amount of risk there as well. So I think that there will be increased numbers. I don't know necessarily that there will be a spike. I think maybe to the end of the summer we could expect some higher numbers, but I think that there will be a very slow burn really in relation to businesses failing. Obviously over trading is a threat to businesses coming out of this as well. So very much it's looking like this is going to be here for quite a while. Just going back to your point about professional services, I mean, certainly one of the challenges that we've had is that the vast majority of our people are working from home, and actually trying to encourage all of our people to keep as close as they can to clients has been a key message that we've been getting across, making sure that our sort of topic specialists within the firm are giving people the information to be able to talk to clients. So it is a challenge, but I think, as we've heard from Simon and Simon, it's really important that advisors are keeping close to their clients and just keeping in touch as much as anything.
Fantastic. I'm conscious that it's past, so for those of you who need to drop off, please do. But what I want to do is open up the opportunity to throw some questions to our panel from the audience. So if anybody does have a question, please into the chats, and I'll be trying to cover off as many of those as we can do in the next kind of 10 minutes or so. So I'll kind of look out for those coming in. As people are kind of thinking about questions, maybe Milan, to come back to you. You know, we're looking at a number of things there in terms of indicators for, you know, the economic health, you know, share price, M&A activity, that kind of thing. What are the kind of information sources that people on the call should be looking at? You know, if they're interested in particular sectors or the kind of economy more generally, you know, what would you point them in the direction of?
Good question. I mean, there are a number of sources. The most obvious one is going to be looking at the particularly listed companies, their annual accounts, their interim statements, which will come out quite regularly. Look at the press. I mean, it's a difficult one because we have access to subscription sources. You know, those firms will, you know, people in-house will. So do look at, you know, track those listed companies, and you know, you have access to tools like Bloomberg or Thomson Reuters if you have access to that. If you have press tools like Factiva. But you know what, there's a lot available in the public domain as well. Private companies are going to be a little bit more tricky, but you know, for listed companies, certainly they'll be putting out their interim statements every quarter, and just, you know, either come to us or, you know, set up press searches yourself on Google Alerts, etc. It's a good way just to keep abreast of those companies. So it's a little bit tricky because we do have access to a number of subscription sources ourselves, but you know, look at those financial results coming out and just keep watching eye on the press as much as you can.
Mm-hmm. And what's your sense, Milan, from what you're seeing about, you know, particularly on the public company side? You know, are companies being fairly open in what they're putting out, you know, publicly available about how they're responding, or are they being as tight-lipped as possible, do you think?
No, I think they are, for sure, because a lot of them have to because of disclosure to the stock market. So more so in the UK, we might, you know, we have very open transparency, but I think, you know, less so in the US, but generally listed companies are required to make those statements, and they are being very, very open. The general thing that, you know, we're reflecting what the two Simons have said is we just don't know. Right now, it's just too soon until we come out of it. So this is why I was, you know, saying earlier, a lot of companies are shoring up their financing because they just don't know. And that tends to have been the statements that I've seen is we're shoring up our balance sheets because we just don't know when we're going to come out of this and what it might look like. But yes, in answer to your question, I think they are being quite transparent about it.
Mm-hmm. We've had a question come in, and do keep sending them in. Question come in for Andrew, but anybody else as well, talking about I guess the personal liabilities of directors at this point in time. You know, for people, I guess, you know, navigating this, you know, unprecedented situation, you know, how do they protect themselves from you know, being exposed to kind of poor decision making at this point in time?
It's a really good question. So I think there's three aspects of this. First of all, the protection. That the key protection at the moment is actually to keep records of decisions that have been made. And I would say going through this time, almost having weekly board calls that are then minuted, and I think recording on a contemporaneous basis what decisions are being made and actually the basis of those decisions, I think, is really important. There has been talk about the relaxation of the wrongful trading laws, and that is one of these measures that hasn't yet been brought in by government. We are expecting it to come through, and the government's basically committed for this relaxation to be current from, I think, the 1st of May. 1st of March through to June. It is important to understand what that really means. So if you've got a business that has been mothballed, so the business has stopped, and I think probably Simon H's company is a typical perhaps example of this. So where you've got a business that's been mothballed, it's continuing to incur liabilities, whether that's rates, whether that's rent, and that the wrongful trading relaxation is really directed to make sure that actually, if that is forced upon businesses businesses because they've had to mothball, then actually there won't be any action taken if the business subsequently fails at a later time because of that build-up of liability. However, it will come to an end, and directors need to be aware of the other responsibilities on them at this point. And the key one is that actually, if the business tips from a solvent situation to an insolvent situation, whether that's a negative balance sheet or whether it's cash flow becoming difficult, then the director's primary responsibility needs to be looking after the creditors. But I think just to finish off very quickly on that point, I think the other aspect of this is actually communication, because there is, directors' responsibilities are one thing, but actually there is, I think, going to be quite a lot of suspicion and kickback against companies that are seen to be taking advantage of the current situation, not to pay suppliers and try and compromise liabilities. And I think there will be a backlash on that, which directors need to be careful of.
Mm-hmm. And either Simon Hack, Simon Blaxill, I mean, is this something which you and your fellow directors have been thinking about? Is this kind of top of mind for you as well?
Well, from our point of view, no, it hasn't been at the top of our agenda. We are slightly in a survival mode, so we need to deal with the most pressing things, which is managing our cash, our supplier relationships, and also the collectibles as well. I mean, being in the airline support business, we're finding a lot of airlines are asking us to defer payment and extending way past their regular credit terms. So no, I can't say that that's been the lead issue for us at the moment.
Yeah, and our position would be similar. It is the short-term stuff. I mean, as I mentioned earlier, fortunately we sold a business, so we have some cash. But you can't discount it, and when you're looking 6 months, 9 months ahead, you're thinking, whoa, none of us know. So not a priority at the minute, but I think for every business at some point it has to be a consideration.
Okay. One kind of last question, I think, maybe before we wrap up, and maybe we'll just go around the panel to get everyone's view. Which is that either from a client side or a advisor side, wherever you sit, lots of advisors like to call themselves trusted advisor. I guess this is a real crunch moment when that kind of advisory relationship is tested. What's the kind of make or break for you at this moment in time? What will generate that goodwill and generate that kind of long-standing relationship? Simon Hack, what's the kind of acid test for your advisors right now?
I think from a banking perspective, the fact that being a US-based company, we're not able to access the CBIL loans. We're asking our bank to support us on unsecured overdrafts, and which they are doing to the maximum that they can without asking us for debentures, etc. I've been quite impressed that they're willing to do that based on our 20-year relationship with them. And there's an element of faith there because we are, after all, in a severely affected sector. So that's been quite important. And, we all have fairly lengthy memories, and we'll take those forward with us.
Mm-hmm. Fantastic. Simon Blaxill, what are your thoughts?
Well, we're very much gazing at our own navel at the minute, just trying to sort the business out. But as I said, we have strong relationships with our advisors. They've always been there when we've needed them. We're happy to pay good money for good advice. I think, as I said earlier, really, it's about just knowing that they're there when we pick up the phone and we get that advice quickly and in the way that we need it. We have a very good relationship with those advisors, and the feeling I'm getting is that they are there. None have said, look, we must do this or we must do that. And when for example, our surveyor offered to ring the landlords, I said, with due respect, and that was accepted. So, I think as long as we continue to have that sort of relationship, that's what it's all about. And next time we need to open up a branch or whatever, we'll be back.
Mm-hmm. Great. Milan, I know you've been kind of wearing the hat of, expert at this point in time, but you also, you run a business too. How have you been communicating to your clients at this time?
Well, that's a really good question, actually. I think two things I'd say is, one, I think Andrew made a comment before, from a kind of selfish point of view, look after your suppliers as well, look after your small suppliers. These are people you're going to rely on once we get out of this situation. I know cash is tight and it's all about preserving cash, but equally we need suppliers to be on hand when we come through this, which we will. But the other thing we've been doing proactively as well in discussion with clients is we have a number of contracts in place with large law and accounting firms where they have a financial obligation to spend a minimum amount. We're actually now, as a small business, extending that period. So we recognise, work volumes are down, totally understandably. So we've been extending that contract term by about, in some cases for 6 months. So we're equally doing as much as we can for our clients. And I think equally law firms should be looking at their small suppliers and saying, how can we support you at the same time? And, it's about helping each other out, I think, at this time.
Great, thank you, Milan. And Andrew, to come to you with some final thoughts, how do we kind of keep the dialogue going?
Well, what I was going to say was that I think that actually there's been lots of comments within this crisis of saying that reputations will be built or shattered on how businesses react to this, and I think that's really important for professional advisors, and it's a really difficult thing to balance. We've all got businesses to run ourselves, so at the end of the day we have to keep on paying our people, but at the same time we have to absolutely go the extra mile for our clients. I think speed of response is really important for our clients, and being able to give them the advice that they need, not necessarily with the clock ticking, because really business owners need to talk through issues, and if they need the experience of their professional advisors who've been talking to many different clients and have built up some experience of particular issues, then that's what they need. There will always have to be the compliance duties, the accounts, the audits, etc. From an accounting practice point of view, which obviously we'll need to have a conversation about and understanding, but it needs to be so flexible and in tune with the needs of our clients.
Great, fantastic. That's a great sentiment on which I think to wrap things up for this morning. So thank you to Milan, Andrew, Simon and Simon. The recording of today's breakfast will be available on our YouTube channel, hopefully by the end of the day, and we'll be sharing that if you want to share that with any of your colleagues. Just a quick reminder, next Tuesday the 28th, Ben Kent will be in the host's chair, and he'll be talking about digital communication in this time, how building up on what we were just talking about, communication with clients. He's got a number of experts with him, Richard Silverman, director at Brand Remedy, Edward Peck, who's with International Finance Network, and Christina Blacklaw's former president of the Law Society. So that promises to be unmissable. Join us on the 28th for that. But thank you to everyone, and good morning.